Hey there, do you really need insurance? Yes, you do. You know, in the past videos, I've talked bad about ILP, investment linked policies, mainly because the investment returns is not as good as one could get just by buying into stocks or even broad-based ETFs. Now, I understand why ILPs were created in the past. Now, in the past, the older generation people, when they buy insurance, they were thinking that, hey, I'm not going to get my money back if I don't claim it. So why should I buy this? So insurance companies came out with a ingenious ways in which they put in elements of investments into the insurance policy. Now, in the event that you don't claim anything from the company, they will give you back a portion of that money, which is the returns from the investments, right? So there is a guaranteed returns and there's a non-guaranteed returns. So if you were to look into the ILP benefits illustration, you'll be able to see how much you will be getting back in the event that you surrender your policy or even let it go until expiry, right? Most ILP plans have a break-even point in which the returns from the investments will be able to pay off the insurance portion of the policy. So break-even point can be after 10 years, after 15 years and whatnot. In my scenario, I purchased a Prudential ILP called the Proof Flexi Cash or something like that. It is a 15-year policy where I pay about $520 a month. So that's something slightly more than $6,000 a year. And I pay that for, I think, 15 years. So that's 90 over 1,000 of premium throughout its tenure. And the guaranteed portion plus the returns at the end of the 15 year is about 100,000. So it's not that great. The guaranteed portion is about 90,000. So I'm pretty much guaranteed my principal at the end of the 15 year if I don't claim it, right? I'm only protected for 50,000 by the way. So I pay a total of $90,000 in terms of the premiums, but I'm only protected for $50,000. And the break-even point is about 10 years, in which the returns from the policy should be equals to my paid out premium, right? It's been slightly more than 10 years. I think it's on my 11th year at the moment, and I have not broken even, right? My other investments in unit trusts or in broad-based ETFs like your local country ETFs or even the SPY has proven to have yielded much better returns. So that's why a lot of people say just buy term insurance and invest the rest yourself, right? You can do it via robo investment, you can do it via unit trust, you can do it via stock picking, or even just buying broad-based country ETFs, right? So that's not the topic for today. I'm not talking about ILP. I don't want to talk bad about it anymore because I just want to let you know, if you want to buy insurance, buy the right type of insurance. If you're on a tight budget, the first type of insurance that you should always get would be a medical or even a hospitalization or even an accident type policy, which would protect you in the event of an unfortunate accident that the insurance should be able to pay out for your surgery or hospitalization, or even give you a lump sum in the event that you unfortunately become disabled. I'll tell you a story. When I was 16 years old, we were recommended to purchase an insurance sold via the schools, right? And that insurance was to cover any form of medical costs in the event of an accident, and even does a lump sum payout in the event that you break your leg or break your hand, or in the event that you land yourself into a hospital. Now, being very tight in terms of money at the time, my parents and I did not purchase the plan at all. And lo and behold, at 16 years old, the age where I was legally able to ride a motorcycle. I got my license, rode my motorcycle. I was very careful riding it, but other people were not very careful, so they hit me. A car hit me actually. I was involved in a hit and run incident. So the car hit me. I broke my ankle. I had to go to the hospital for a day. Got myself in a cast, and then I had to spend money for rehabilitation, physiotherapy, and whatnot. Had I purchased an insurance, the fee for the procedure would have been free. The bed stay would have been free, and I would have gotten some kind of lump sum payment for being disabled for the next 3 months. So that was a miss, right? So if you are a parent of young children and whatnot, you should at least get a hospitalization or accident type medical insurance plan, right? I've got a neighbor who lives near my house at the moment. They've got a couple of children, and they both recently hurt their hand. So one fell down rollerblading and got some kind of a fracture of the hands. Well, you have to pay for the X-ray, you have to pay for the consultation, you have to pay for the procedure to cast the hand and whatnot. So all of those is really unnecessary spending. If it's coming out from your own pocket, it can be very painful. But if you have a medical hospitalization come accident type insurance policy, you can be covered. So if you need to invest in the most minimal type of insurance, make sure that you are at least adequately covered in terms of hospitalization and accident. So seek out financial advice from an independent agent, and then see what your options are. Well, hope that was a helpful tip. Till then, take care and God bless.